Do you want to learn exactly how I caught 430 pips on gold using smart money concept? This strategy is very simple, straightforward, and if you guys want to learn exactly how I did this, make sure you subscribe to this channel, like this video, and make sure you watch to the end. See you in the video. Peace. So welcome back guys. Now let's get straight into it. So as you guys can see on the forward chart on gold, we are very, very much bullish. The other flow is bullish and the structure is very bullish. So now let's identify or let's break it down. Right, you guys can see you actually have a high and higher low, higher high, higher low, higher high, higher low, higher high, higher low, a little range right here between this high and this low when the market later created a higher high. So what we're expecting right now is just basically an higher low and then a higher high according to the structure, right? Because here's the last low the market's created high, higher high, and this high is very high and this high. This high is higher than this high, so that's basically an higher high, right? We need the retracement to the demand zone or to the last demand zone the market created, or even to the last demand zone that sponsor this bigger structure. Then we need the retracement to that zone, and then boom, another higher high as the trend is actually going, right? So now let's label the structure by putting in our break of structure so to very, very friendly and like let me say beginner friendly, yeah, right? We had a break of structure right here. Sorry, we had another break of structure right here. Right. So now you guys should remember that after the big structure right here, we're supposed to expect or we're supposed to, the market's supposed to, give us a little retracement or a very nice retracement to the discount zone of this trend. But then the market never did that. So we should stay reactive because actually we can't trade or sorry, we can't move the market. So we need to follow the market. So after this big structure, the market gives us another big structure right here. Another big structure right here. So after this big structure has been created, market give us a little range. So you guys can see this range, right? And this range is basically between this high right here and this low. So after this big structure, market give us another high right here. But then before this high, market give us a little range. So you guys should remember that this low is the protected low, while this high is the weak high, right? So following this trend right now, we need to wait for the retracement or just like basically our higher low before the continuation to the upside, our higher high. So as you guys can see, that we have a very nice demand zone right here in a 4 hour time frame, right? We had a very nice discount demand zone right there, right? And so let's go to lower time frame and check for more demand zones because there's a probability whereby you can have more than one demand zone and a current or just like in a setup. Let me put it that way. So let's go to the 2 hour time frame and check that. Right. So right here in the 2 hour time frame, you guys can see that we have another demand zone right here. Very, very nice demand zone right there. So we basically have two demand zones or two point of interest in this setup. Right. So how do you do? How do we know the one the market will expect? No one knows, right? Because we don't move the market. No one knows that. But what will keep us protected or what will make us know which the market will use is basically change of character. So any of these zones that market give us a change of character will be the one we are going to use or will be the one we are going to be taking our trade off from. So right, we actually have two point of interest, right? We have this for the 2 minutes demand, 2 hour demand zone, and we have this 4 hour demand zone. So now let's play the price and let's see how or which of these demand zones the market will react from. Because actually, if we say we shouldn't wait for a change of character, this would be a very, 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 very bad trade and a risky trade. Let me put it that way. Why? Because our stop loss is very, very huge one, and even there's a probability by the market will disrespect that zone, right? Because we don't know if the market will expect this one or this one, right? So now let's see if we don't wait. Let's say we don't wait for a confirmed entry, we'll be risking almost 54 pips, while we'll be targeting 400 480 pips, like 482 pips, sorry, and that will be like 1 to 8 risk to reward. And even the risk to reward is very, very much okay. 1 to 8 is very nice, but then the stop loss is very, very huge and it's just too huge. And even we don't confirm the trade, so we shouldn't use this and it's not really advisable. So then we just wait for the internal change of character, or let me say change of character actually, and then we take our trade risk free and with a very, very nice risk to reward. So now let's get to the 15 minutes time frame and wait for the change of character right there. And even before then, let's now break down the internal structure, which is actually this bearish trend, right? So this internal structure is actually the one that serves as a retracement for the market to go back to, or for the market to mitigate our bullish pattern interest, and that's like this, right, you guys can see that we actually have something like high, higher low, higher high, higher low, higher high, higher low, higher high, then a lower low. So these actually are internal change of character, which or internal change of character indicating that the market is no more bullish, but then the market is now bearish. Right. So after this lower low, market give us a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So right now we're expecting another lower low to our product interest, then we are expecting, or sorry, we are expecting market to react and give us an internal change of character from that, like from our product interest. So now let's play the price and let's see how this goes. Right. So we're playing the price right now. So you guys can see market is giving us a very nice lower low as the internal trend is going. Right. So sorry, let me pause that. So right here you can see the bearish structure is very much okay and nice. Right. So now we can see after the mitigation or the mitigation of our product interest, this is actually our zone. This is our product interest. Market gives us a very nice mitigation right there. So now let's go to the 5 minutes time frame and wait for our change of character. So now let's break down this trend too. Right. So you guys can see we actually have an high, higher high, higher low, just like an equal high right there, and then market gives an lower low. Right. I won't really call this one a change of character, but then it will be just like a shift of market structure, right? Because this one doesn't create an higher high, but then just like an equal high. So that would be like a change shift of market structure, SMS, right? And the market was a break of structure, right? Taking out this low, that was just like a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and a lower high. So right, what we're expecting right now is just like a change of character. What is a change of character? Change of character is when the market disrespect the current trend. And as you guys can see, the current trend is very much bearish. And we need to see the market turn it bullish. And how does that work? We need to see the market take out this last high. Because as you can see in the history or this trend, you can see that these highs are being protected. So if the market disrespect that high, that's basically a change of character, indicating that the market is now bullish. Okay. So now we should be expecting market to take out this high, this internal high right here. We should expect market to take out that high. So if the market take out that high, then our trade is being confirmed. But if the market continue taking the low, that's like we should just wait for maybe the market might respect this zone or even come respect this last zone right here. So we need to wait for the market for the price action right there. So now let's continue playing price. So you can see the market is actually giving us some range between this high and this low right here. But yeah, it's very much nice, and I think that's just like a liquidity build up or something. But let's see. Just like market is inducing a lot of traders right here because there is a lot of traders that that's not been patient enough to see or to get the trade confirmed, right? So the market just giving us some retracement, just like a reaction just to induce more traders into the trade, or just like yeah, just to force them into the trade. Those are not really psychologically strong, you feel me? So now, but we need to wait for the market, right? We need to wait for the market. Market is actually 10% buy, 10% sell, while the remaining 80% is just simply patient. So you guys should be very patient and let the market come to you. Right. So let's continue playing the price. Let's see what the market has for us. Okay. So praise, praise, praise. So you guys can see that the market actually give us a nice break of structure to the nice change of character to the upside by taking out this last high. So if we want to break down this trend now, it won't be a bearish trend anymore, right? So you can see break of structure. That's like a lower low, lower high, lower low, lower high, lower low, lower high, lower low, then an higher high. So what we're expecting right now is basically an higher low, then an higher high. So that would be like the market is now very much bullish. We need to wait for the retracement to mitigate, for the market to come back to mitigate the demand zone that's responsible for that break of structure. Sorry, for that change of character, right? And then we take our trade from there. So now with this one being seen, right, with this change of character, we are now very much confirmed that the market was expecting this one and the market will actually go bullish, right? Because you're following the structure, and market structure is king, guys. Like market structure is king. Just learn to follow the market structure. And then so now just need to go to back to the 15 minutes time frame and mark out our reliable demand zone. Then we take our trade off from there. Simple and straightforward. So right here in the 15 minutes time frame, you guys can see that market actually give us a very nice demand zone right here. A very nice demand zone right there. So this demand zone right here have imbalances, which is very, very nice. So we are going to be taking our trade off from here, and then our fixed profit would be from this would be this high, like this demand, this supply zone, sorry, and our last day profit will be this all-time high, right? What I mean the market will give us, or sorry, what I mean our take profit will be at this high right here is because the 15 minutes time frame is still very much bearish, right? You guys can see that we're still very, very bearish in the 15 minutes time frame. What I mean by that is you can see lower low, lower high, 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 lower low. Right. The market might still come to this supply zone right here and give us another lower low. Right. So and if the market do that, that means the market is still coming to take out this last low. But then if we get our entry from here, the market will actually eat our fixed day profit before even coming down if it want to. But then our first profit will be here and the last profit will be here because we can't really say the market might distribute this supply zone and the market might expect it. Okay, so then we are going to be taking our trade off from this demand zone right here, which will be a very nice entry where we're risking almost 10 pips, there about 10.8 pips, right? So our first profit will be the demand zone, while our last take profit will be this all-time high, right? So now let me indicate that. Sorry, this is actually the hidden base right there. That's the hidden base right here. So the market might expect that, and then continue going down, and the market might just expect it and continue going to the upside. So now let's see how the trade plays out. So we're actually risking 10 pips and we are actually targeting 430 pips, right? So that's simply a 1 to 40 routes to reward, right? So yeah, let's play price and see how this goes. All right, so you guys can see that after the market created this high, right? Instead for the market to comes back straight down, for the market to come straight down, the market give us just like a little retracement, then continue going to the upside. So a lot of traders will be induced, or a lot of traders will be trapped, just like smart money trap. A lot of traders will be trapped in this trade because they'll be taking their buys off from this demand zone, right? Because they'll be like, okay, this is a change of character. Market retrace and then create another reconstruct to the upside. So this is the last demand zone that market created before this high. So that will be like their entry, which the market will take off their stop losses because we still have a very nice imbalance right here for the market to come take for the market to come, for the market to come fill before they went to the upside. So yeah, that's actually right. That's actually we are mitigating this demand zone, right? We are actually mitigating the trade. So let's see how this trade plays out. So you guys can see that at this demand zone, sorry, at this supply zone that I told you guys, market gave us a little reaction off of there, but then it later was expected. So I think we are not really safe. Though our first average must have been eaten right here, and our remaining trades or our remaining entries will be running in deep profit. So right now, you can see the market is actually moving, giving us a very, very nice move to take profit. Just keep holding and keep observing the price. Right, gotta adjust that. So this trade is basically the trade I took myself. I took this trade live myself, and I'll show you guys the before of the trade right on this screen. You guys will see that I took the trade, and then trade it very, very nice take profit. So I think I hold this trade for 2 to 3 days there about. I don't really remember, but this trade moves really, really cool. Right, just do you understand all the just the let me say the high knowledge or very, very nice knowledge about market structure. If you understand market structure, bro, you're safe, right? You very, very safe, right? You very, very safe, right? So yeah, you guys can see trade move really, really well. Though will give us a little range right there, but then it's just about patience, right? Trade later hits, take profit real nice, right? Oof, that was a nice trade right there. You guys can see we actually bagged almost 434 pips and 137 risk to reward. Oof, that's very, very much high for a lot of people. Yeah. So that's basically how I caught this trade on gold, and I hope these guys learned something. But if you guys remember, sorry, if you guys learned something and if you guys enjoyed this video, please consider subscribing to my channel, like this video, so you can help this video to go to other people for them to watch and learn. So yeah, that will be the end of today's class. Guys. Peace. See you in the next one.